Hello and welcome. If you're over state pension age here in the UK, or you've got a parent or a loved one who is, then I need you to stay with me for the next few minutes. Because what I'm about to share could put thousands of pounds back into your pocket. Money that's already been calculated as yours, sitting in the system right now, just waiting for someone to come and collect it. I'm talking about one payment alone worth almost £6,000 a year, completely tax-free. And there are 5 of them altogether. 5 payments that thousands of pensioners across the UK are entitled to right now and aren't receiving a single penny of. Not because they don't qualify, simply because nobody told them these things existed. The Department for Work and Pensions won't write to you. They won't ring you up. The money sits there year after year, and the only difference between the people who get it and the people who don't is that somebody knew to ask. I'm Helen Hartley, and I've spent over 20 years working inside the UK pension industry. I'm going through all 5 of these payments today, what each one is worth, and the single step it takes to claim it. Please do stay until the 4th one. It's the strangest of the lot, and you claim it in a way that feels completely back to front. And if you haven't already subscribed to this channel, please do that now and turn on the bell notification. The rules around pension entitlements change every single year, and when they do, the DWP won't send you a personal letter explaining what's different. This channel translates every update into plain English so you always know where you stand. The people who subscribe stay one step ahead. Right, let's get into it. The first payment is called Attendance Allowance, and it's the one worth almost £6,000 a year. Most people assume it's only for someone in a wheelchair or already in full-time care. That's simply not true. Attendance allowance is for anyone over state pension age whose health means they need a bit of help looking after themselves or someone to keep them safe during the day or the night. You might be thinking, I've got savings put by, surely that counts against me. It doesn't, not one penny of it. Attendance allowance is not means tested. The DWP doesn't look at your income, your savings, or whether you own your home. The only question is how your health affects your daily life. And the conditions that qualify are far wider than most people realize. Arthritis that makes dressing a struggle, failing eyesight or hearing, Parkinson's disease, heart trouble. The early stages of memory loss where someone needs prompting to stay safe. It isn't about the name of the condition, it's about the help you reasonably need. And you don't need to already have a carer in place. The question is whether you need the help, not whether you're currently getting it. If you qualify, it pays around £77 a week for help during the day or night, or around £115 a week if you need help both day and night. That higher rate is almost £6,000 a year, paid tax-free, straight into your account. One thing that matters before you make that call. Attendance allowance doesn't backdate to when your condition first started. It starts from the day you first contact the DWP. Every week you wait is a week you cannot get back. You ask for the AA1 form, and Age UK or Citizens Advice will help you fill it in completely free of charge. The number is in the description below. In Scotland, the equivalent is now called Pension Age Disability Payment. The second payment is one the government already owes to certain people. If you're a man watching this, please stay with me, because this is the one to pass on to your wife, your mother, or your sister. It mostly affects women who reached state pension age before April 2016, who were entitled to a pension uplift based on their husband's national insurance record. For tens of thousands of women, that uplift simply never happened. They carried on for years receiving less than they were owed with no idea anything was wrong. When the DWP eventually checked, it found over 130,000 people had been underpaid. More than £800 million between them. For married women, the average correction has been around £5,500. For widows, closer to £12,000 paid as a single lump sum. If your husband reached state pension age before the 17th of March 2008, that uplift was never applied automatically. You had to request it yourself, and the only place it was ever mentioned was a single line on his pension form. Most women never saw it. The DWP has now worked through nearly every case it can find on its own, which means if you haven't been contacted, a review is not coming to find you. One call to the pension service can trigger a full review, and if you were underpaid, the difference comes back as a lump sum. The number is in the description. The third payment isn't from the DWP at all. The average council tax bill in England has now passed £2,000 a year, and a great many pensioners pay every single penny of that without ever checking whether they have to. If you receive the guarantee part of pension credit, your council tax bill can come down to absolutely nothing, zero. Even without pension credit, a modest income and savings under £16,000 will often qualify you for a meaningful reduction. And on the guarantee credit, there's no savings limit at all. Your council does not check whether you're entitled. It sends the full bill and it waits. Nothing happens until you apply yourself. Search your council's name alongside the words council tax reduction or visit the benefits section of their website. I've put a guide in the description. Now the fourth one. This is the one I asked you to wait for, and it's genuinely the strangest on the list. It's for anyone caring for someone at home, a husband, a wife, a parent who can't quite manage on their own. There's a benefit called carer's allowance, around £86 a week, for anyone giving 35 hours or more of care to someone receiving a qualifying benefit like attendance allowance. But here's the trap. If you're on the state pension, you almost certainly cannot be paid carer's allowance. The full state pension is nearly 3 times that amount, and the rules won't pay you both. So most people apply, receive a refusal letter, put it in a drawer, and think, well, that's that. It is absolutely not that. That refusal letter is the most valuable piece of paper in this entire video. When the DWP turns you down, it quietly confirms something called underlying entitlement. It's telling you that you meet every single condition. They simply can't pay the cash because of the overlap with your pension. And that status unlocks a completely separate payment called the Carer Addition inside pension credit. Just over £48 a week, more than £2,500 a year added on top of any pension credit you already receive. The people who miss out are the ones who reason, quite sensibly, that their pension is too high and there's no point applying. So they never apply, never get the letter, and without the letter, the money never comes. One word of caution. If the person you care for receives a severe disability addition in their own benefits, your claim can sometimes affect theirs. So look at the full household picture before you begin. You apply for carer's allowance on the official UK government website, and once the decision arrives, you take it to the pension credit team. Full details are in the description. The fifth payment is the largest single amount on the list, and it comes with a hard deadline. If you've reached state pension age but haven't yet claimed your pension, you can ask for up to 12 months of payments to be backdated with no questions asked about why you waited. On the full new state pension, that's more than £12,500 paid as a lump sum alongside your first payment. But the DWP will not offer this to you. It is not part of the standard claim. You have to ask for it by name. One honest point. If you've left your pension unclaimed, the system treats that as deferral, which gradually increases your future weekly payment. So it is a genuine choice. But for most people who simply didn't realize they had to claim, the lump sum is almost certainly what they'd want. And the window is exactly 12 months from the day you reach state pension age. Miss it, and those payments are gone for good. If you've reached state pension age and haven't yet claimed, this is the one to act on today before anything else. Call the pension service and say clearly that you want to backdate your claim to the earliest possible date. The number is below. Let's bring this together. Attendance allowance, call the DWP today. The clock starts with your first contact. The pension underpayment, one call to the pension service could trigger a review worth thousands. Council tax reduction, check with your local council. You may not owe what you're paying. Carer addition, apply for carer's allowance, get the refusal letter, and take it to the pension credit team. State pension backdating, if you haven't yet claimed, ring immediately. The 12-month window will not wait. Not one of these payments will ever come looking for you. Each one sits quietly until somebody knows to ask. If this video has helped you, please share it with someone who needs to hear it. One conversation from you could genuinely change someone's financial situation for years to come. I'm Helen Hartley. Subscribe so you don't miss the next one, and I'll see you there.